Welcome everybody and welcome into another weekly recap, of course, on our main pairs gold, Bitcoin and Eurodollar for the week from the 20th of September until the 21st of September. We're going to start from gold. As you can see, as always, we are on the 5-minute chart. That's what I like to use for the weekly recap because it gives you an idea, but still it's not the hourly time frame. You can see the price sensitivity areas. You can see everything. So we were ending the prior week with another block being created, and as you can see, starting from the 20th of September, we were coming with a bullish momentum. As you can see, we can see it lasted until here. We got this bullish momentum from the 20th of September, bouncing at the key level 1759 over the top of the order block, giving you a nice, as you can see here, break and a retest in continuation up to 1781 at least. Okay, so as always, we're not going to rush it too much. So we see bullish price action. Let's check if we had any news report. On Monday we didn't have anything. Let me see if I'm missing some minor impacting report, but yeah, there wasn't anything, and we saw just a correction from the week prior, the retail sales, very bearish action. So we see a sort of correction. I would say like 50% because is what I like to say, but from 1740, 400 pips, we still 20 pips to correct the whole move, so around a nice percentage as well. But as you can see, 1781 holding very strong, because also on Tuesday, actually we reached 1781 on Tuesday. We only had the building permits, housing starts, which were positive, but not really impacting right now the investor sentiment, because of course, as you may know, as you should know, what is impacting gold is inflation data, retail sales data, labor market reports. So on Monday we were very bullish. We retested the top of the order block. On Tuesday, on London session, we have a retest of 1759.5 key level and PSA, as you can see, creating a strong support, and then breaking a retest of the key level, of the PSA / order block tops, and then to go up until 1781. We end up Tuesday very slow. We open Asian session on Wednesday with a nice 40 pips move on the opening, bouncing from 1772.5 key level, revisiting 1781, but still getting into this range. You might consider why we're still in this range, why there's no moves on the upside or downside. This is because at the end of the day, we had, it is here, 8 p.m. So is 2 p.m. Eastern time. We had the FOMC meeting, FOMC interest rate decision, FOMC monetary policy, and this was the main theme of the week. Very important, very expected. People were waiting if Powell will say some words like tapering, inflation under control, labor market okay, COVID not a risk. This was what investors were expecting, wanted to say, to be optimist, and sort of Powell really not with the facts, because as you can see, price didn't actually immediately corrected into the range or immediately broke above. Was not a very huge move. As you can see, we moved like 100 pips, 200 pips, not much more than a regular Monday, Tuesday prior. So it's not really a big move, but it was announced that it's most probable that the taper will come and will be announced in November, with already a timeline predicting the tapering to finish, to end, to be completed by mid 2022, which was I interpreted as a very bearish move. That's why we saw liquidity grab downside, liquidity grab on the upside, failing to make new highs, and then very strong rejection. From there, yes, we retested this previous PSA. You can say that we retested the trend line. What is really important is that we retested the bearish structure, and we broke this structure, this bullish structure that was there, as you can see. And what we saw, this was the end of Wednesday. On Thursday, we had the here we had the initial jobless claims, which was kind of negative figures, but still, as you can see, investors were bearish, were bullish for dollar, bearish for gold. Also, if I'm not mistaken, dollar was weak. So dollar was weak, but gold still pushed down, which should be the opposite. But as you can see, we look at the chart and what the investors do, and what we see is the rejection of this PSA, breaking below the previous lows, and yes, reacting at these previous lows on the left hand side, 1747, and especially also 1739 key level, as you can see here, creating a double top and ending the week into this new range and order block being created around here. Of course, investors are coming towards the end of the month. This was 1737. Coming towards the end of the month and the end of the quarter. So be very careful. Don't expect clean moves. Might be some profit taking, some sort of correction from the market. Let's go on the euro dollar. As you can see, we had this same, we were ranging all the week. Yes, we can identify the same structure prior to the FOMC like gold, because remember, we are in a risk currency versus safe haven. Of course, gold is not a risk currency, it's not a currency at all, but it's where investors put their money. It's still against the dollar. Sorry, that's it. So we took advantage of dollar weakness in the week prior to the FOMC. We saw exactly the same move, liquidity grab, rejection at this PSA on the high time frame, and then bearish. What I was telling you about, as you can see here, the jobless claims were weak, giving dollar weakness, and on euro dollar you see the exact movement. Dollar is weak, euro dollar goes up, which didn't happen on gold. As you can see, dollar is weak, and here gold was sold, so it didn't make much sense, but it is what it is in the market. So then we had a rejection at this PSA and went back to the range to react at these previous lows to close off the week. Let's just check if we had any particular news report apart from the FOMC, especially from the Eurozone. We had the PPI of the Germany, which came out higher than expected, but didn't actually impact much here, as you can see. Tuesday, nothing. On Wednesday, we had the non-monetary policy ECB, not impacting. Then we have the FOMC, market PMI of Germany, France, and the Eurozone, bad, worse than expected. And this, of course, in the morning, weirdly was priced in, so it didn't give, it was actually bullish on euro, still above 50, which is the level of the PMI, but we always remember that we are against the in euro USD, euro dollar. Dollar has a much more important role than the euro itself. So that's why if dollar was weak, as I showed you, as I told you, is more impacting. You can say like euro impacts 20%, 30%, and the dollar impact 70-80% of the pair. So if dollar is weak and the euro is weak, it's probably going up because of the greater importance of the dollar towards against the euro. Some Italian consumer confidence, euro IFO worse than prior, which might show exactly this weakness of the euro. As you can see, worse than expected, worse than prior, and if dollar was not in any particular situation, of course, the euro gets sold against the dollar. Let's jump now on Bitcoin, which, as you can see, had a pretty nice move. So coming to the 20th was, sorry, okay, now we are just ranging here. Okay, we're coming in a very, very bearish trend, coming from the highs around 48 something, from the week prior. As you can identify, a bearish structure here, reacting at the 39-40k key levels. We can also put the PPLs. No, doesn't matter. And as you can see, very, very clean bearish structure, printing lower highs, lower lows, lower highs, lower lows, until 39 something. From there, what you can see is we got a reaction. We are still on 22. We are coming towards the FOMC. We got this reaction as well. As you can see, this reaction, if we zoom in, might look very small, but we are talking, let me see, we are still talking about 100 of pips. This is 100 pips. And we got the same exact move, bullish, bearish, that we got on every other pair against the dollar. So showing you how it reacts as exactly as any other commodity, any other asset. There you go. Then we shift in a bullish structure. The trend line doesn't really give much, but as you can see, from printing lower highs, lower lows, lower highs, lower lows, we shift into a printing higher lows, confirmed only when breaking above this previous lower high, giving you a shift very short-lived into a higher bias, but still around 500 pips from the lows here. From these lows to these highs is around 500 pips. So yes, looks small, but it's a big movement. There you go, showing you how volatile and how much volume is present on Bitcoin nowadays. There you go, just give me a second. Okay, and here what happened here. So we know that 44K flat is a strong support and resistance because we saw very strong resistance and then very strong support for like 100 pips. But what happened here was the China news of China central bank banning and declaring illegals the cryptocurrency, causing a drop from 45 to 40. This is around also another 450 pips, which corrects completely the move that took. Let's see here. It took 2 days, corrected in 3 hours. And from there, we are just ranging. So this was also the week on Bitcoin with the FOMC, very small, but very, very reactive and sensitive to China news banning the cryptocurrency markets. So this is it for this weekly recap. See you guys next week.